Okay, so 4.1, we're talking about the journal now, and if you're following in the textbook, it's page 112 to 115 of the textbook. We're going to be talking about what a journal does. And basically, up until now, we've been using transaction analysis sheets and key accounts to help summarize or break up an entry into its two parts. And I don't know if you remember me telling you that actually the T accounts are not a formal document. So what I'm going to teach you today is how to use a journal, and the journal is an actual accounting document. Okay, the journal that we're going to talk about most is going to be a general journal. And you can think of a general journal as being some sort of a diary of all the transactions that are happening for the company. There's 4 parts to every journal entry. One is the date of the transaction. One is the accounts that are being debited, the account that's being credited, and an explanation of what is happening in the transaction. So this is what a journal looks like. Up in the top, I have 3 transactions. The first transaction, I have put what the T accounts would look like, and then I'm going to show you how to use the journal. So sold services to R. Heinz for $900 cash, sales slip number 1. The sales slip is your source document. What is the proof that this transaction happened? And in this case, it's the first sales slip. So you know that your cash is being affected and your sales are being affected. So if you can see here, I have put the 2 T accounts. Your cash is being debited and your sales are being credited. So we're now going to skip that step of using the T accounts, and we're going to go straight into the general journal. So on the left-hand side here, you're going to put the date. You put the year on top and then the month. And then you don't have to keep writing the month all the way down. And in this second little column, you're going to put the first. Now you always write your debits first, so you can see here that your cash is being debited $900. So cash, $900. For now, you're going to leave this post-reference column blank. And you think of this general journal as a diary, and the diary will continue as business continues. So you always want to put a page number in case you were to get these mixed up and you would want to know kind of the order in which it goes. Then you're going to write your credit, which in this case your sales are being credited $900. You always indent your credit to remind yourselves that you have to put the $900 over one column into the credit column. And then on the last line, you're going to put sold services to R. Heinz for cash, and then the sales slip number 1. So that's just a reminder of what happened there. Okay, if we look at the second transaction, paid $400 to the Gazette for a newspaper ad using check number 1. So it's happening on the 3rd, your advertising expense is being debited and your cash is being credited, with a little memo at the end to show what you've done. On the 5th, paid administrative assistant salary $700 with check number 2. Happening on the 5th, your salaries expense will be debited, your cash will be debited. And what are you doing? You're paying salaries with check number 2. Okay, so that honestly is as difficult as general journals get. We've talked about this already, the 4 parts of a general journal. If you need to review that, that is in the textbook. And just to talk a little bit about advantages and why we use journals. Basically, the reason why we use a journal is because your whole transaction is put together in one spot instead of split between 2 T accounts. Also, it reduces the errors because, I'm going to flip back, because you can see everything. You can see, yeah, I have a debit, yes, I have a credit, everything looks good, so you can keep on going. It's also going to be really easy at the end to do some totaling as well. And it presents a chronological order of all of your history of all of your transactions. So if you want to know what you did on the 5th, you can go back and look at it instead of having to search through all of your T accounts. And it also shows maybe where your company or when your company was the busiest. So if you see a pattern that maybe on the 5th, your company is super, super busy, that might tell you that, hey, I need to maybe put some more staff in place on the 5th because for whatever reason, things are really busy. And it gives you an idea of how many transactions are happening in a day as well. So it's just a nice, convenient place to put everything. And at the bottom here, we're talking about double entry accounting. Just a reminder that there always has to be a debit and a credit part to every transaction. And some transactions might have 3 parts, which we've already done before as well. So if we look at this bottom one here, you might have a debit of 700, but the credit might be split up between a 600 and a 100. As long as your debits equal your credits, you're fine. And that is honestly all I have to tell you about in this section, so I think you have enough information to keep on working.